This conference will now be recorded.
Okay. Okay, so we now move to inventories. We're moving down the balance sheet now. We've learned how to make journal entries, and we're looking at assets and liabilities, mainly the assets at this point. So we looked at cash and receivables. We looked at plant and equipment, and now we're looking at merchandising companies and inventories. Is everybody in here own shoes?
Yes.
So everybody owns some shoes. So now we want to look at you running a shoe store. Now they sell shoes all over the world. People running shoe stores all over the world. So with your degree in hand, I'm sure that you're going to be able to run this shoe store. Is that correct? And sell these shoes?
Yes.
Okay. When we had our rental car company, we simply, when we received revenue, we debited cash or account receivable and we credited sales. So we either had a 2 or a 15 in terms of, and that's the only entry we had to make. Now, when we get ready to sell inventory, there are 3 entries that have to be made. The first entry, and I got Roman numeral 1, we buy the inventory, debit inventory and credit accounts payable. In the second journal entry, when we sell inventory, we debit cash, account receivable, and credit sales. So that entry stays the same as before. But there's a third entry that we have to make where because we sold the item, we got the debit cost of goods sold and credit inventory. So as we're running our shoe store, we buy the shoes and then we sell them, hopefully making a profit. So, and most times, now we're using what's called perpetual inventories. We keep up with what we're selling. We know the quantities. Grocery stores might not be perpetual if you're selling a lot of small volume items, but if you're selling shoes, computers, high volume items, you've got inventory numbers, and every time you sell an item, you record it because you need to know whether it's in the warehouse or not. So with shoes, and especially if you're selling online, the person selling those shoes has to know what he has in stock, what he does not have in stock, and we'll have these minimum order quantities. So once we get down to just 10, we order. So we're going to be, keeping track of the inventories in general as we sell the items. Our income statement should be looking like this now: debit sales, less sales returns and allowances, net sales, less cost of goods sold, gross profit. Then we subtract the operating expenses to get total expenses. So what we're trying to do here, insert. Let me insert a couple of rows there. Okay. So, we're overly concerned with the returns. That's an issue. But what we want to always make sure that we have a gross profit. So early on in this chapter on inventories, we only concerned with sales price, cost, gross profit. Did we make a gross profit? We've already done this, so we already know how to record salaries, advertise, and rent, and put that as operating expenses. But if you're running a shoe store, you first of all got to know if you made a profit on what you sold. Once we have our net income, then we have our federal taxes. And it could be state also, but I'll just put federal income taxes. And if we've got a 10% rate, then our taxes are going to be what? $25,000. So our net income after tax is going to be $225,000. So this is the net income before taxes. So this is how your income statement should begin to look on the problems that you're submitting. Okay, so let's look at our example where we're selling one shoe, one pair of shoes. The shoes have a selling price of 50 and they cost us 20. And in this first scenario, we sold one pair of shoes. So we make the entry to buy the shoes. And so we're going to debit inventory for $20. And we're going to credit account payable for $20. So that's that first journal entry when we buy the inventory. When we buy an inventory, we always typically buy that on account. That is, you're running your shoe store and you don't, the person who's selling you the shoes don't necessarily want you to pay the delivery person. And so they will let those shoes be delivered. Then they will, and you'll set up an account payable and you will pay the person later. Then we sell the shoes for $50. So we're going to make the journal entry. Debiting cash, we'll just say cash, could be account receivable for 50. And we're going to credit sales for 50. But because we sold the shoes, we no longer have them. We're going to make a journal entry, debiting cost of goods sold, and crediting inventory. And the top of our income statement is going to be sales 50, cost of goods sold 20, and we made a gross profit of 30 on the sale of those shoes. And we don't have any shoes in inventory, so there's no cost in inventory. Are there any questions on what we did here? So everybody can sell a pair of shoes, right?
Yes.
Well, sell me 2 pairs of shoes then. So tell me what's going to happen if I sell 2 pairs of shoes. So my business is expanding. So I got to buy 2 pairs of shoes, correct?
Yeah, it's gonna be 40 inventory, 40 accounts payable.
40 inventory, 40 accounts payable.
And then it's gonna be $100 cash and $100 sale.
Since you sold 2 pairs of shoes, you got $100. Debit $100. Cash or whatever. Credit sales $100. Now, what's our cost going to be now?
40.
So our cost is $40. What's our income statement looking like now?
100 for sales and 40 for less costs. And gross profit of 60.
No inventory left. Then the next week, we sell 5 pairs of shoes. So what happens when we sell 5 pairs of shoes?
100 and 100.
We're gonna buy 5 pairs of shoes at $20 each. That's 100. Then if we sell them, how much money we gonna have now?
250 and 250.
What's our cost of goods sold now?
$100.
What's our income statement looking like now?
250 for sales and 100 for less costs.
So our gross profit is what?
150.
And we don't have inventory, anything in inventory. I done give everybody a minute to do the scenario where 10 pairs of shoes are purchased and sold. So do the scenario where 10 pairs of shoes are purchased and sold. So I'm gonna give you a minute or so, and everybody work on that. So do we have those 10 pairs of shoes sold? Got to buy them first. So if we buy 10 pairs of shoes, what's it gonna look like? What's it gonna look like?
200.
200.
So how much we gonna pay for the 10 pair of shoes?
200.
Okay. And then when we sell them, how much we gonna get now?
500.
$500. What's our cost of goods sold?
200.
And of course, we post these journal entries to the T account. And now what's our income statement looking like?
500 sales, 200 less costs.
Gross profit is what?
300.
Any questions? Okay, let's look at the next situation. We buy 10 pairs of shoes, but we only sell 5 pairs. So we bought 10 pairs of shoes, but we only sell 5 pairs of the shoes. So we don't sell them all in this scenario. What we're going to do now?
Inventory 200, accounts payable 200.
Yep, we bought 10 pairs. But we only sold 5, so how much money we get?
250.
We're getting $250 because we only sold 5 pairs of the shoes. So what's our cost here going to be?
$100.
Why is it 100? Then we buy 200.
Yeah.
But 100 is correct because we only sold 5 pairs of the shoes. And so now when we look at sales, the sales are 250.
And this causes
Sold 100. So our gross profit is 150. But we have an inventory what?
of 100. I mean, of you have 100.
Here we have 100, which represents what?
The amount
5
of shoes.
pairs of shoes at $20 each. So our inventory now, so that's the difference from the other scenarios. We sold everything before. Now we have inventory. All right, so since y'all decided to do that, now I'm gonna give you all a couple of minutes. Work the scenario where the quantity purchased is 10 and the quantity sold is 8. So take your time and work that scenario. So y'all coming and running the shoe store. So how we coming and running the shoe store?
Inventory 200, accounts payable 200.
We still are buying what?
10
10
shoes.
pairs of shoes. So 10 times 20 is 200. We sold 8 pairs of shoes, so how much money are we going to have now?
400.
We're going to have $400. What's our cost of goods sold going to be?
160, I believe.
8 times you sold 8 pair at 20 each, so it's 160. So when we do our income statement, we have what, 400?
Mhm.
Our cost of goods sold is 160. Our gross profit would have been what?
240.
240.
And what do we have left in inventory?
40.
We have $40 left in inventory.
Which is 2 shoes.
Consists of 2 pairs of shoes at $20 each. Can we run this shoe store?
I believe so.
Darius said he believes he can run the shoe store. Okay. Can anybody else run the shoe store? Okay, you run the shoe store?
I believe I can.
Sam, can you run the shoe store?
In the fall semester, yes.
Say what?
In the fall semester, yes, I'll run it very well.
That's Zalandra, can you run the shoe store? You're gonna be able to run the shoe store in the fall. Any question on this example? So a high school student can run this shoe store, but if we run our shoe store, we have all of our different uh, pairs of shoes and all the sizes. So you'd have to be doing this for each pair of shoes. You have to be keeping track of the inventory by size and everything. So, we have computer programs and everything to do that. So, okay, so we've looked at that. Let's change the scenario a little bit. Suppose we're still selling the shoes at 50, but we have two purchases. The shoes are selling at different prices. So some are at 20, some are at 25, and some are even at 30. Okay? So the shoes are not always coming in at the same price. So that would be nice, but every time you buy something, the price is going to change. So let's look at the situation where you do buy 10 pairs of shoes. Okay, you do buy 10 pairs of shoes. You got 5 at 20 and 5 at 25. And let's assume that you sold 4 pairs of shoes. So the quantity sold is 4. How are things going to look? How are
Um,
things going to look now?
but you said that you originally have 10 shoes and you sold 4?
Yep.
Okay, well then my inventory will be 225 and my accounts payable will be 225.
Okay, so let's maybe add some columns in here.
Because I purchased the 5 shoes for 100 and then the other 5 for the 125.
Okay, so now we've got 2 different purchases. So first of all, we buy 5 at 20. So we're going to debit inventory for what?
For $100.
We're going to credit accounts payable for 100. Then we buy them again, buy another 5, but now we buy them at what, 25. So we had two purchases. We bought 5 at 20, 5 at 25. Then we're selling what? 4 pairs of shoes at 50. So we sell 4 pairs of shoes at 50. What's our sales journal entry going to be?
200.
Okay. 200 for the sales, cash, and 200 for the sale. What's our cost of goods sold going to be?
25? No. 225.
Well, you only sold 4 pairs.
Oh, true.
Um,
Would it be 90? Or no? Let's see. The first time.
Well, let's make an assumption, which is called FIFO here, where we assume that we sell the old shoes first. Our FIFO assumption.
So we'll assume that we sold them at $20.
So we
Okay,
sell the old shoes first.
so it'd be 80 then.
So we'd have 4 times 20 was 80. Okay, so the 80 is simply that we sold these first ones first. So when we do the income statement, what do we have on the income statement?
200 for sales.
Cost of goods sold is going to be what?
80.
So our gross profit is going to be what?
120.
Then what's our inventory going to look like? What we're going to have an inventory now? We're going to have one left at 20, right?
Yeah, and then the other 5 at 125.
Then the other 5 is going to be at what, 25?
Mm-hmm.
So we got the 125 and the 120. So what's our dollar amount in the inventory?
125 plus 10 is 145.
145. So let's look at our scenario. The shoes didn't cost the same thing. So we decided that we were going to sell the older shoes first, then we'll sell the second one. So we sell the $20 ones first, then we're going to sell the $25 ones. So the quantity sold was 4. We have 2 inventory purchases. So when we sell the 4, it's 4 times 50, gives us 200. But our cost is based on the 4 being, that cost 20 being sold. So 4 times 20 is 80. This is how our income statement looks. Sales less cost of goods gives us gross profit. And in inventory, we got $145, 1 at 20, 5 at 25. Everybody still ready to run the shoe store? Is anybody ready to run the shoe store now?
Yeah, I think I can. I could do it.
Okay, so give me the scenario when we have 5 at 20 and 5 at 25 and you sell 8 pairs of shoes. So in this case, you're selling 8 pairs of shoes.
So inventory 100 and accounts payable 100.
Okay.
Then the next inventory 125 with accounts payable 125.
Okay.
And then we're gonna sell 5 pairs at um,
Aren't you selling 8 pairs?
yeah, but they hold on, let me get my thoughts together.
Get your thoughts together.
Yeah,
You're gonna sell the first 5 $20.
there we go.
What kind of shoe store y'all running? 5. If y'all in the shoe store and y'all sell shoes for $20.
I thought you said we first.
What's wrong with y'all selling these shoes for $20? Selling price is $50.
I thought it was 5 at. Oh shit! I mean, shoot, my bad.
Selling price is $50.
5 at 25.
So we're gonna sell the 8 pairs of shoes at $50. And we make these athletic shoes. Dominique's running her athletic shoe store.
So we
So it's
selling
gonna be
Now, how much money the owner of the shoe store wants?
$400.
Wants $400. Our cost of goods sold gonna be now.
the first 5 would be 100,
So we're gonna have 5 out of 100.
and then the other 3 what's the cost again? What they increased to?
$25.
25, 75.
So you're gonna have 5 at 20. And then you're gonna have what?
At 25.
3 at 25, right?
Yes.
So 5 at 20 plus 3 at 25 is gonna give you what?
175.
That's gonna give us 175. We run our shoe store. So we debit cost of goods sold and credit inventory for 175. So now, we do that income statement. What do we have for sales? 400. Our cost of sales is 175. So what's our gross profit? $225. What do we have left in inventory now?
2 pair.
2 at 25, so that's $50, right? So only we have is 2 at 25. So let's see what happened. We still selling at 50. So we bought 5 at 20, 5 at 25, and we sold 8 pairs of shoes. So in selling 8 pairs of shoes, make the purchases, but now as we make the sales, same thing. Selling price always Sales is 8 times the 5,400. But now as we cost them out, we got the 5 at 20 and the 3 at 25. So our total cost is 175. So our gross profit on the shoes is 225. We have 2 left in inventory at 50. And right on shoe store. Okay, so let's look at in our next situation. We bought 5 at 20, 5 at 25, and 5 at 30. We bought 5 at 20, 5 at 25, and 5 at 30. What happens if we sell 8 and then 12? So your job is to, at this point, go through this and tell me essentially how much money you made and what's left in inventory. If in the first scenario you sold 8 and in the second scenario you sold 12. And the selling price is still 50. But 5 costs 20, 5 costs 25, and 5 costs 30. So I'm going to give you all about 8 minutes or so to work on that. Do we have those inventories sold?
Yes, sir.
Profit made?
Yes.
So what's it look like on our purchases? You got 3 different purchases, correct? Well, let me give them the bottom line. What's the gross profit?
225.
Okay.
Yep.
Take your word for it. What's the gross profit in the other situation?
315.
How much?
315.
All right. Let's say that's what the gross profit is. Let's see how we got there. So in our first situation, we bought 5 at 20. Our 100. Then we bought 5 at what? 25. That's our 125. 25. Then we had a final purchase. What? 5 times 30 would be what? 150.
Yes.
150.
Okay. Then we sold how many? 8 pairs of what?
8 pair of shoes for $400.
Okay, so 8 at 50, 400. What's our cost of goods sold?
We bought 5 at 20 and 3 at 25, so 175.
So we had 5 at 20.
Yes. 3
And
at
we have
25.
3 at 25. 5 at 23 at 25. That's going to be 175. We do that income statement. What? Sales is 400.
Yes. And this
Cost of
cost
goods
is
sold is what? 175. So what's our gross profit?
225.
What do we have left in inventory?
2 shoes and 5 shoes at 30.
We have 2 at 25,
Mm-hmm.
5 at 30.
Mm-hmm.
So what's our total amount of inventory?
200.
200.
Any questions on our shoe store when we selling 3 pairs of shoes? Galleria Mall sells a lot of shoes, don't they? Let's go to a scenario where we sell 12. So we sell 12 pairs of shoes. One thing that we know is that the purchase information is going to stay the same.
Mm-hmm.
You can copy this. Make it over here, hopefully. So that information stays the same. But now we sold 12 pairs of shoes at 50. So how much money we get now?
600.
600.
$600. What's our cost of goods sold gonna be?
285.
That's gonna be what? 5
20.
at 20?
At a 20. 5 at
5
20.
and 2 at 30.
At 25. And what? 2 at 30?
Yes.
Well, 5 at 25 at 25 and 2 at 30 is how much?
285.
$85.
Yes.
So when we get ready to calculate that gross profit, it's going to be what?
Minus
6
285.
minus
Less,
2
less than 285,
and 315.
350. And what do we have in inventory now?
3 shoes at 30 for 90.
We got $90 in here.
The gross
And that's
profit 315.
15.
315.
Yes.
Yes.
So we got what? 3
At 30.
at 30. So how's everybody doing and running this shoe store?
Increase the amount of the shoes. Not enough profit.
Well, he went from 175 to 285. But that's how shoe stores operate. So some people got their hands on their chins and then just looking. We're going to take about a 10-minute break so y'all can think about this. And after the break is over, we're going to get into inventory valuation methods. So this handout is in Blackboard. So we're going to take a 10-minute break. Then we're going to go into inventory valuation methods and what we'll be doing for the rest of the course. So we'll give you a 10-minute break to think about this and get your thoughts together.
This conference will now be recorded.
So how our inventory is coming now?
It's fine.
That's fine.
Yes.
Okay, so you can see we had the situation where we buy inventories at different amounts, and so we have to have a valuation method. And there are 3 methods that we utilize. FIFO, which is first in, first out, which everybody's expected to know, where we sell the oldest one first. LIFO is just going to go the opposite way, where we sell the last ones first. So when we're selecting the inventories, rather than selecting the first ones, we select the last ones. Then we have weighted average, and in weighted average, we're going to get an average price for the inventories. So C students are expected to understand FIFO, complete the quiz on that. B students are expected to do FIFO and LIFO. A students are expected to be able to do FIFO, LIFO, and weighted average. There's another method called specific identification. If we have high price items, cars, jewelry, we're going to have an invoice for each item. We're going to keep track of it item by item. So when we have high price items, different prices, we specifically identify when we have special items. Let's look at what we're saying with FIFO. Here, the items are being loaded and pushed forward. So when they're sold, the person in the warehouse gets the ones that got their oldest, and he takes those forward to be sold. So this is an illustration of how LIFO is operating. So assuming all of these shoes are the same size and same type, when it's time to deliver the shoes to the customer, the unloader, he doesn't go back into the back. He comes right up at the front and get the first shoes he sees, and then he takes those and deliver those. Now, as we look at a more detailed example, not as much detail. We're selling 100 pairs of shoes for 15, 200 pairs of shoes at 20, and the selling price is 40. When we have a lot of shoes, we're going to have an inventory chart. Okay, so we have an inventory chart when we have a lot of shoes, because they're going to have all different sizes. And so, this would be computerized, but you'd have an inventory chart like this. And with this chart, when you bought the inventory, and notice I say journal entry 1 here, you make the entry here and you transfer it over to the balance whenever you buy it. When you sell it, you make journal entry 3 to determine your cost. So here we just looked at 2 or 3, but we might have a purchase and a sale, then another purchase and a sale. And so that being the case, as we move forward, we'll keep track of our inventory on this inventory flow chart, because we might have 8 or 10 different transactions. So in order to get them structured and everything. So let's look at the chart again. Journal entry 1, whenever we purchase something. Journal entry 3, when we sell it. So you want to keep that in mind. And I'm going to say this 3 times. Selling price never goes into the inventory chart, flow chart. For the second time, the selling price does not go on the inventory flow chart. And for the third time, the selling price does not go on the inventory flow chart. So if I said that 3 times, that might be a reason. Okay. So let's look at this situation where we purchase 100 pairs of shoes at 15 and 200 pairs of shoes at 20. So we first of all are going to make our journal entry 12. So if we purchase 100 pairs of shoes at 15, how many pairs of shoes did we buy? What's our total price? So we got 100 pairs of shoes at 15. Is that $1,500?
Yes.
Okay. So we're going to debit inventory for $1,500 and credit accounts payable for $1,500. And then we will come to our inventory flow chart. And we don't have any beginning inventory, but we're going to put this first purchase in here. And we bought 100. We bought them at 15. And so our total is 1,500. And once we do that, whenever we buy something like that, we copy it and put it in the balance column. Okay, so we buy it, then we put it in this balance column. So this is where we keep track of what's there. Then we purchased 200 pairs of shoes for $20 each. So that's going to be
4,000.
another entry where what? Debiting inventory for what?
4,000.
We're going to credit accounts payable for what?
4,000.
And now we're going to put this in the chart. So here we have 200 pairs of shoes. They cost $20 each. And so costing $20 each, that's $4,000. And now we're going to transfer these to our ending balance. Undo that. I don't know why I want to act up like that. Let me try it one more time the lazy way. Copy. paste. Okay, acted okay. Then it says, what happens next? We're selling 150 pairs of shoes. So we're selling 150 pairs of shoes for $40 each.
100 for
So how much
15.
money are we getting when we sell these 150 pairs of shoes for $40 each?
You said at $40 each?
Mm-hmm. That may be 6,000.
Yes.
Yes.
So, and see what you're seeing now is that journal entries are not changing. The journal entry is not changing, but we need a 16 where we're going to debit cost of goods sold, where we're going to credit inventory. So let's see how we'll utilize the chart to do that. So this is what we have, and we know the quantity sold was 150. So
So
what that
100.
means is that we sold all of these. So we're going to come into the cost of goods sold column. We're going to bring the 100 here. We're going to bring them in at 15. And now we know what? All of these are gone. But we sold 150, so we got to come in here and get what? 50 more. But these shoes cost what? $20 each. And so the total on this 50 that we sell is going to be what? $1,000, right? So we add the 1,000, the 1,500, and the 1,000, and we get 2,500. And so we come into our chart on that particular sale of 150, calculate the FIFO inventory that went out, and the 2,500 comes here. So when introducing the chart, because we could have 10 transactions on your quiz tomorrow, you might have 10 transactions. So a chart like this would kind of help. Okay. Then we got to do the same thing. We got to do an income statement to see what our gross profit is. So it's simply going to be sales less cost of goods sold gives us a gross profit of what, 3,500. So we're always trying to see what the gross profit. So we're making some combination of journal entries 1, 2, and 3. Then we calculating our gross profit to see if we made money on the sale. So what have we said? For our shoes, we bought 300 pairs of shoes. The older shoes are here, the old 100, the new 200 are back here. So when the shoes are shipped out after they're sold, the old shoes come out first, then the new ones come out. Since we can have a lot of transactions and we would need a chart like this for each pair of shoes, for each shoe size. So this will all be computerized, of course. When the purchase occurred, journal entry 1, that information is recorded in the first column and is transferred to the balance column. We record it, we transfer it to the balance column. Then when we sell the shoes, we're selling the old ones first, and then we're gonna come out, we sold 150. So our total here needs to be 150 sold. So 115, they're all gone, 50 at 20, 1,000, and left in inventory now is gonna be what? 150 pairs of shoes at 20, or what, $3,000. So I've introduced the chart to you so that when we work with mobile transactions, you got a way to keep track of your purchases and sales in an organized way. If it's just one transaction, it's not as critical. But when we have lots of transactions, then we have to do this. Okay? So let's see. Let's look at a practice problem. And all we're concerned with right now is FIFO. Okay, so all you're concerned with is the column that relates to FIFO. Not have to worry about anything else until tomorrow. So we have here in beginning inventory 100 units at 22,000. Then we got two purchases. Then we sold 250. Then we purchased 200 more. Then we sold 250. So you can see now with our shoe store, it's developing, it's doing more business, it's selling more and more pairs of shoes. We got to be organized so we can keep track of things. So we do it this way. Then our journal, we have our FIFO, LIFO, and weighted average column. You just got to worry about FIFO. Okay. So just kind of setting up this way because a lot of the journal entries will stay the same. So you don't have to worry about that now, but a little different format. So we debit inventory, and we credit accounts payable. So we still are doing that when we make journal. So we just got it a little differently now because we got to be able to do it FIFO, LIFO, weighted average. But right now we're just concerned with FIFO debits and FIFO credit. A little bit larger, only FIFO. What else do we have? Lots of space for journal entries to be made. Here's our inventory chart for FIFO, which you're familiar with. Now, when we use LIFO, they got an inventory chart for them, and weighted average, they got an inventory chart too. Then we got our T accounts, and we just got selected T accounts, the sales, and the cost of goods sold, FIFO, LIFO, and weighted average. And we use the T accounts because we have a lot of transactions. When we get ready to answer the problem of what the gross profit was, we pull the amounts out of the T accounts and put them here. So we pull them out of the T accounts and put them here. So you got to make the journal entry here. Then you got to post it or put it in the inventory chart. And then you got to, make the journal entries, put it there. And as we make these journal entries, we're going to transfer to the inventory account also. So let's see how this problem would work. It says that we have 100 units in beginning inventory at $20 for $2,000. Okay. So what we're going to do here is take this information, since this is the beginning inventory, and we're going to copy it. And hopefully be able to put it in here. Okay. We don't make it, we've already made the journal entry for this, okay? So we have beginning inventory of 100, the unit cost is 20. And so we had $2,000 in the beginning inventory. Then let's look at our first transaction. We purchased 150 pairs of shoes for $25 each. And remember, our goal is eventually determine what's our gross profit. So we purchased 150 pairs of shoes at $25 each. What's our cost going to be on that?
$37.50.
$37.50.
Yes.
Take your word for it. So we're going to debit $3,750, and we're going to credit $3,750. We're doing the same thing when we work a problem, because this journal entry stays the same on all methods. We don't have to duplicate it. Once we've made the journal entry, you see that later, and we got it made. So what we got to do now is to take this information, 150 pairs of shoes at $25 each, $37.50. So we first purchase 150 pairs of shoes. Unit cost is what, $25
Yes.
for $37.50,
Yes.
and we're gonna transfer that over. So we transferred in what we bought. Then we had another purchase of what?
100 shoes at $30 for 3,000.
Shoes at $30 each. So we got to come in here and make this journal entry again. So we're going to debit inventory and credit accounts payable. And what's our amount going to be? 133,000?
Yeah.
Then we got to put that in our inventory chart. So we purchased another 100, 30 each, 3,000. Then we're going to transfer these over. So at this stage, we had 100 in beginning inventory, then we had 150 that we bought, then we bought another 100. And now we have our first sale, and it says we sold how many?
250 shoes
How much?
at $100 each.
So we sold 250 pairs of shoes at $100 each.
It came to
So we know that we got to do what? We just debit cash,
credit sales.
credit sales. So how much are we getting? We sold how many?
250. So I got 25,000.
I'll take your word that it's 25,000. And I sort of got this in a tally because we're not going to the chart with this. Then we have cost of goods sold.
I got 5,750. I did 5 shoes at $20, which totaled 2,000. And then the other 150 shoes I did at 25,000 for 3,750.
Well, let's go to our chart. So how many did we sell?
250 total. So I sold 100 at $20.
So we sold this first 100 at 20. We can copy these. And we can paste them down here. And they're gone.
And then the second 150 at 25.
I'll scratch those out. And we sold all of these too.
Yes, sir.
So we copy these. Then as we look at our totals, we have what?
100 shoes left at for $30,000. I mean for $3,000. I'm sorry. 100 shoes at 30.
But
For
250. So this becomes how much?
Oh, I got 575 for that.
5.
750.
And what's left?
100 shoes at $30 for 3,000.
So this 130 is what's left. These are all gone too. Now we also need to post our T accounts. So we said the amount was what? $57.50. So we have a problem, be posting all the journal entries, but right now we're just trying to get these inventories down.
Mhm.
So we're gonna take the 25,000 and the 57.50. Then we're gonna have the 57.50 here. Okay. So let's go back. What's our next transaction?
You purchased 200 shoes at $40 for 8,000 total.
So we purchased 200 pairs of shoes at $40 for 8,000. So we got to come back to this journal entry. But our amount is 8,000 this time. And so now we got to put these on the inventory chart. So that's 200 pairs of shoes. At $40 each for 8,000. And then we're going to go ahead and transfer these over. So we have 130 and 240.
It gives you,
So what did we sell?
250, I believe. Yeah.
250 and 100 is what's sold. So 250 at 100 is what's sold.
25,000.
So what we can do is we can come up here and say, okay, we know what our accounts are going to be. So we can copy the accounts and bring them down here.
This one is 100 at 30.
So you see we got our accounts down here. So the sales would be how much? 250 and 100, that's what?
$250 times 100 is 25,000.
Okay. So we got 25,000 again. So we're going to debit cash, 25,000, and credit sales for 25,000. And so we don't forget about it. We'll go ahead and put that in our T account for sales. Now we need to make that cost of goods sold entry here.
It's 9,000.
So how many did we sell?
We sold 250. So I sold 100 at 30 for 3,000.
So we
And
sold
then I sold
at 30 for 3,000.
and then I sold 150 at $40 for 6,000.
So then you say you sold 150
at $40 and to 6,000. So
So the
my
total sold is what, 250?
yeah,
Total
for
cost is what, $9,000?
Mm-hmm.
What do we have left in inventory?
50 shoes for $40 a piece, totaling 2,000.
Now, so this cost of 9,000 is going to come in our journal entry. So that's what the purpose of that chart. See, you have a lot of transactions as you're selling shoes daily. So you can't just scratch it. You need that card. Now we're going to take this 9,000, put it here as a debit that cost goods sold. We could do the inventories and other accounts, and you do it on your comprehensive problem, but I'm just concerned about these numbers right now. So sales, the total amount of sales is what? 50,000. And the total cost of goods sold is what? 14,750. So now we're able to bring these numbers to 50,000. And the 14,750. And sales less cost of goods sold. Make sure we subtracting it. The gross profit is going to be what? That 29, 30, is that 39? 39,250.
35,250.
All right, 35,250. I take your word for it. Yeah, 35,250. So that's what you expected to be able to do. That's what you expected to be able to do. Are there any questions by anybody? Are there any questions about anybody?
Nope, seems pretty straightforward to me.
So Darius says it seems pretty straightforward. What about it, Dominique? Is it straightforward? Okay. So now you can correct your study problem, right?
Oh, I corrected that earlier.
After all of that fussing you were doing at the start of the period.
No, it just wasn't adding up. I just knew. And me and you worked on it and it still wasn't adding up, so something was wrong. But I fixed it.
Oh, you fixed it. Okay.
Yes.
Christopher, what about it?
No, sir. It looks pretty easy to me.
Okay. David?
It'll be all right.
Cal?
It's okay.
Sam?
I'm good.
Yeah. Are y'all gonna be good at 10:10 tomorrow morning?
Maybe. Depends. I think you should make everybody simple since it's our first time. I'm just saying.
I should make everybody what?
Everybody simple and easy.
Wait a minute, I couldn't hear. I should make everybody do what?
Make theirs simple and easy. Make it simple for everybody.
No, I'm not gonna make it simple for everybody. You want me to make it simple for everybody?
We learning still. It's a learning process. It
Oh,
takes time.
okay.
No, I'm just playing. We like a challenge. It's okay.
You like a challenge. Oh, you want a challenge now. Let me see if I can find a challenge.
No, not right now. What?
Yeah, not right now.
Don't
Not
go
right
look for it.
We ain't asking you to go look for no challenge.
Let me see what I can find though. Not a challenge per se, but around here.
If I email you the thing that we was working on last week, can you tell me if I did something wrong on it?
I guess I could.
Okay, thank you.
Okay, so here is shoe inventory quiz 1, and this is kind of like a homework. And so we worked on FIFO today, and we know that C students just got to get FIFO down. Now B students got to get FIFO and LIFO, and A students got to get FIFO, LIFO, and weighted average. Got to get all 3 down. So this is the homework problem, and we're going to start on it now, and it'll be due tomorrow at the beginning of class, so you can work on it. You have beginning inventory, 2,000 pairs at 20. You purchased 2,000 pairs at 25. You have a cash sale of 1,000. So what I want everybody to do is just to do right now journal entries 1, 2, and 3. So I want you to do journal entries 1, 2, and 3. show me what that's going to look like. So let me see.
You posted it in Blackboard already?
Not yet. Should be there now. So it's in Blackboard now. I want you to make the first 3 journal entries. And in fact, because you got beginning inventory, that is not a journal entry. You simply place that on the inventory chart. Okay, our overall goal always is to be able to come up with sales less cost of goods sold for the gross profit. So in this problem, we had a beginning inventory, 2,000 pairs at 20 each. So with 2,000 pairs at 20 each, we just put that right in there, 2,000 at 20 each. Then if we're making journal entries, what are we going to do? The first was a purchase of 2,000 pair at 25 each.
So it'd be inventory, accounts payable.
50,000. Okay, so I already had that in here. So you should have had 2,000 at 25, 50,000, and you should have dragged that over here to your balance. And so before you make that first sale, it was 4,000 pairs of shoes available. Now, when you make the first sale, it was a cash sale of 1,000 pairs of shoes at $100 each. So how much money did you get?
For the COGS or for the cash sales?
The cash, how much?
100,000.
Okay, so it should have been 100,000. And you should post that 100,000 to the T account for sales. Then when we go to the inventory flow chart, what do? We simply pulled out 1,000 at the $20 cost for 20. So our cost is what? $20,000. And so you should have had a cost where you debit the cost and credit the inventory for 20,000. And you should have posted that 20,000. So you would have posted the sales of 100 and the COGS of 20. So hopefully you have that. That's in the problem. So hopefully it's there and you working and checking the answers. Okay. So you working to get the same thing. You should not just be looking at them, because tomorrow it won't be that way. But I want you to work on it. And I did the first few for you, so you would not be completely lost. Okay. But you got to finish it up. Any questions?